Hi everyone, so today I will explain to you correction of errors. There are three steps that you need to take. The first one is what was a double entry? What did the bookkeeper post? Second question is what should have been the double entry? And the third question is what correction is required? The correction journal is debit X account and credit Y account to correct the error. To note that you always need to assume that if one side of the entry is not mentioned, it has been recorded correctly. Let's look at a question to illustrate this concept. The cash sale of 200 rupees was not recorded, and this is an error of omission because they haven't recorded this at all. You use these three column format to help you find the correcting journal. So what did they do? They did nothing. What they should have done, they should have debited cash 200 and credited sales by 200. Therefore, to correct this, you debit cash and credit sales by 200. Rate expense of 1000 rupees paid in cash has been debited to the rent account in error. This is an error of commission because it is the expense account in the P&L for both postings. However, this is not the right expense account. The credit entry was not mentioned in this case, and therefore we need to assume this was done correctly. What they did, they debited rent and credited cash. What they should have done, they should have debited rates instead. The cash amount is correct and the cash entry as well, which is credit cash 1000. Therefore, to correct this, we need to reverse that initial entry for rent. This is done by crediting rent 1000 and debiting the correct expense account, which is in this case rates 1000. New furniture 2000 rupees purchased on credit has been debited to the repairs account. This is an error of principle because capital expenditure has been treated as revenue expenditure. The credit entry has not been mentioned and therefore we need to assume this was done correctly. What they did, debit repairs and credit payables. What they should have done, they should have debited the non-current assets instead, and therefore to correct this entry we need to reverse the repairs posting by crediting repairs and debiting your non-current assets by 2000. Rent 1200 rupees paid in cash has been debited to the rent account as 1400, and the costing error on the sales account has resulted in sales being overstated by 200 rupees, and this is a compensating error. What they did, they debited rent 1400, credited cash 1200, and credited sales by 200. The debits equals to the credits, however there is an error, and therefore what we need to do to correct is we need to reverse that sales posting by debiting sales by 200 and credited rent by 200, and this would come up to 1200 rent expense. The cash entry is correct and therefore we don't have to do anything for that. A cash sale of 76 rupees has been recorded as 67 rupees. This is a transposition error because the double entries are correct, however, the figures used are wrong. Therefore, as you can see, you need to post the difference. which is 76 minus 67, which is 9 rupees, you need to increase your cash amount by 9 and credit your sales amount by 9. A cash sale of 200 rupees has been debited to sales and credited to cash. This is a reversal of entry because when you make a sale, you need to record your cash in 200 and credit your sales by 200. To correct this, you need to debit cash by 400 and credit sales by 400. Every single question regarding reversal of entries, you need to double the effect. Because if you have posted 200, then what will happen is both accounts will net off to 0, which is not what you're aiming for. You can use the account to help you find the correcting journal, and this is on the next slide. If we pick note 3 in your question, new furniture 2000 rupees purchased on credit has been debited to the repairs expense account. The writings in black are the initial postings, so they debited repairs and credited payables. To correct this, we need to reverse that posting to repairs, so we credit repairs account and debit the non-current asset account. This is shown in red. So your repairs account comes up to 0, this is what we want, and we want our non-current assets to increase by 2000. If we look at note 6 now, a cash sale of 200 rupees has been debited to sales and credited to cash. Similarly, the writings in black are the original postings. To reverse these entries, you need to debit cash by 400 and credit sales by 400. And this is shown in red as well. You can now see why we use 400 for our correcting journal, because if you have used 200, then your cash and sales accounts will net off to 0. I hope this tutorial was useful for you, and if you would like more videos like this, do not hesitate to let me know and hit the subscribe button below. Thank you very much, and I'll see you next time.